Hey everyone, and welcome to Thoughts on Investing. Today, we're going to jump right in and do a deep dive on HIMS and HERS Health, ticker symbol HIMS. We're going to look at everything, the business, the numbers, the stock chart, to try and figure out what is really going on with this company.
But first, you know the drill, we've got to get the important stuff out of the way. Just a quick reminder that this is all for educational purposes. It's definitely not financial advice. The markets can do crazy things, so please always do your own homework before you make any decisions.
So, here it is, the big question of the day. When you look at HIMS right now, it's a tale of two extremes. Is this stock a massively mispriced opportunity just waiting to be scooped up? Or are we watching a full-blown meltdown in real time? That's what we're here to unpack.
And let's be totally honest, if you just glance at this stock chart, that meltdown argument, well, it looks pretty strong. After a huge run, the price has just fallen off a cliff. The market is basically acting like this company is completely finished, sending the stock into an absolute free fall.
But here's where the story takes a sharp turn, because while that chart looks absolutely terrifying, the idea that this company is actually going to zero, well, that narrative just doesn't hold water when you look at the facts. The data tells a completely different story.
I mean, just look at this. These charts are the polar opposite of that stock price. This isn't market sentiment. This is the actual business behind the stock. And what we're seeing is powerful, consistent growth across the board. Revenue, gross profit, and now it's even hitting profitability.
And to put a number on that growth, the company has pulled in $2.2 billion in revenue over the last 12 months. So let's be clear, we are not talking about some small speculative startup here. This is a company operating at a serious scale.
And this isn't some recent flash in the pan either. If you look at the long-term picture, since 2018, their revenue has grown at an incredible 92% compound annual rate. Think about that. Going from just 26 million to over 2.2 billion. That is just explosive growth. So here's the bottom line. When you strip away all the noise in that scary stock chart, what you're left with is a business doing over $2 billion in sales with over $1.6 billion in gross profit that is now actually profitable. This is just not the profile of a dying company. Not even close. Okay, but we have to be fair here. We have to look at both sides. And while those business fundamentals look fantastic, we can't just ignore what the stock chart is telling us. So let's be real. From a technical point of view, the stock looks incredibly weak right now.
Looking at the big picture on the weekly chart, you can see the stock was forming this huge cup and handle pattern. That's usually a really bullish sign. And it did break out for a while, but then it just completely failed. And the crucial part is it broke below that key $25 support level. In the world of trading, when a major support level like that breaks, it's a huge signal that the sellers have taken firm control.
And it's not just one thing. It's a whole bunch of bearish signals piling up. The stock has lost its uptrend, it's trading below all the important moving averages, and it even had a death cross recently. There's no two ways about it. The momentum is without a doubt on the side of the sellers. So let me be crystal clear here. Based on this technical picture, this is not the time to bet the farm. Trying to perfectly time the bottom of a steep drop, well, there's a reason they call it catching a falling knife, because you're probably going to get hurt.
You know, this brings us to a really fascinating conflict in the psychology of investing. On one hand, you've got something called price anchoring. Just think about it. If HIMS stock was at $40 a share with these exact same fundamentals, people would probably be screaming buy. We anchor our emotions to the price. But on the other hand, you have value investing, which teaches you to focus on the disconnect, that gap between what a company is actually worth and the cheap price the market is giving it today. And that leads us to this really core principle, right? It's almost always a better long-term strategy to buy great businesses when they're on sale and nobody wants them, instead of chasing them when they're expensive and everybody is feeling euphoric.
So, with all that said, how could someone approach a situation like this? Well, one potential strategy is dollar cost averaging. Instead of trying to be a hero and nail the perfect entry point, you just build a position in stages. You could start with a little here. If the price goes even lower, great, you can add some more. If it gets down to a major psychological level, like 10 or 11 bucks, maybe you get even more aggressive. The whole point is to stop trying to time the exact bottom.
Now, this strategy doesn't mean there's no risk. Let's be very clear about that. HIMS faces real threats, from regulators, from intense competition, and just from the terrible market sentiment right now, which could last a lot longer. This is absolutely not a risk-free investment. And I want to leave you with this final thought. Right now, the pessimism around this stock is just off the charts. It's extremely high. But historically, the point of maximum pessimism is often really close to a major turning point for a company and its stock. So the question you have to ask yourself is, are we watching a permanent breakdown, or are we standing right near one of those incredible inflection points?
If you got some value from this analysis today, please don't forget to hit that like button and subscribe for more deep dives just like this one. Thanks for watching.